Sheila, there's been so much written on this. I love the Barclays note. What did you see?
I think there are two things to worry about here. We knew that this quarter would be breathtakingly bad. We were expecting that. The problem is Johnson did not give us even one hint that 2013 might be getting a little bit better, and the cash number is worrisome. The company ended up with $930 million of cash, which is okay, a little bit better than what analysts were expecting, below the company's estimate of $1 billion, and it wasn't a very clean number. That's what people are worried about.
The clean number here and the idea of cash. Mario Gabelli with us, with GAMCO. Are corporate officers using cash differently now? Is there a new cash rule, whether it's JCPenney or Danaher?
The game back in 1999 was to issue options. When you issue options, you don't get the benefit of dividends. That game changed after March of 2003 when the tax cut on dividends was reduced. They went to RSAs. Secondly, when you do RSAs, you're willing to pay out dividends and you're willing to buy back stock to bolster your stock. So shareholder compensation has become a commentary that the CEOs are looking at in a greater and more pronounced fashion.
What's the forward view here on Penney?
The forward view is people are really uncertain. I mean, yes, they're probably going to survive another year or so. They have enough cash in the balance sheet. They up their revolver. The problem is after that, he cannot keep on printing these breathtakingly bad quarter after quarter after quarter and expect to survive.
Right. The whole backstory here is Vornado. Steve Roth, his number 2, out yesterday. Give us an update on how this major shareholder of JCPenney is handling this.
Yeah, so Vornado has about an 11% stake in JCPenney. They've lost over $200 million on the stake. What was interesting, though, was the commentary in their annual report. They were very clear about, look, we think this is an impaired asset. We may be looking to spin it out or do something with it. Also saying that we're really unclear about the recovery of the company. We don't see how that can happen.
What is Ron Johnson doing wrong that Terry Lundgren, for instance, at Macy's and Glenn Murphy at Gap are getting right? Because their stocks are going in the opposite direction.
Yeah, when he first came out of the door, I think the biggest criticism for Ron Johnson was that he tried to do too many things too quickly. He all of a sudden just thought he could come in, reinvent the department store, reinvent the customer. People said he tried a little bit too hard, too quickly to do that, and it was a huge bust.
Of course, JCPenney has some bad company, good company, if you want to put it that way, in that Kohl's also reported earnings this morning, and it showed that this consumer is struggling with the idea of finding value in price.
Yeah, and there's this notion coming back that the consumer barbell theory is coming back. So the higher-end stores are going to do okay, the lower-end stores are going to do okay for consumers who are getting value. It's this middle who's going to get squeezed. Kohl's was another data point for that. They actually came out and reduced their earnings.
Mario, do you buy luxury goods? I mean, you've been all over this for years.
Well, we were one of the largest shareholders, in part because we liked what Dick Smith was doing with Neiman Marcus, and so we were a large shareholder when that was taken private. And clearly, we like the aspirational products on a global basis. It's very hard for a value person to pay retail. In fact, it's very hard for me to pay wholesale when I buy something. So in that context, there is a large market. It's growing, and
but it's richly priced. You're not buying Hermes this morning.
If the product, but the stocks are different dynamic. We like the booze, the distilled spirits companies that sell.
Booze is okay. Booze is an okay word on Bloomberg Surveillance.
Never a doubt. But in that regard, Mayor Mike says 16 ounces of soda is not good, but 16 ounces of Maker's Mark is okay, particularly if they don't dilute it.
That's a break exclusive.